Today we have to seriously talk about what is passing in the market, and not only in the market of the cryptocurrencies, in everything. Because right now there are movements happening in the bonds, in global liquidity, and in traditional markets that many people then are still not connecting correctly with what Bitcoin does. And until you understand that, the Bitcoin chart is not going to make sense to you. So, having said, let's start with the video. What worries me is the U.S. bond market. At 10 years old, it is firing again, and the 30-year-old one is too. And this then is not a minor detail. When bond yields go up like this, way means that the financial system starts, to a certain extent, tighten up. Fear is starting to show. Financing problems, and especially pressure on leverage. And here is where many people get confused. Many people believe that the most leveraged market, the world's cryptocurrency market, and this is very serious, the market more. The most leverage on the planet are the bonds. That's where basically the big funds make authentic barbarities with leverage. Because historically it was a safe market. The problem comes when it stops being so stable, and the moment when the bonds, well, the hedge funds move violently. As you know, they start to suffer, and when they suffer, the malnourished are already arriving, and when they arrive, the mangoes as I mentioned in the previous video, if it is sold, then whatever is necessary to cover losses regardless of whether it's stocks, if it's gold, if it's oil, if it's Bitcoin, it makes absolutely no difference. And this takes us directly to what currently happening, because we are seeing skyrocketing yields in long-term bonds. What normally then means that someone is aggressively selling U.S. debt. Whether it's China, be it Japan, you can already imagine where things are heading. Nobody then wants to buy American debt. Well, the Federal Reserve ends up having to then intervene monetary expansion, more liquidity in the system, and that ends up to all markets in general. Both stocks, as I have mentioned, like cryptocurrencies, like gold, in the end, then affects everything. That's why I'm looking at bonds much more than the own cryptocurrencies at these moments, because the true risk is not that Bitcoin wanting to fall based purely on technical analysis. The risk is that there is a chain reaction of financial deleveraging. And here comes the interesting part, because despite all that macro stress, it is not reacting catastrophically, and that it catches my attention a lot. NASDAQ is falling. S&P 500 is falling. Tensions are rising in Bitcoin then in a certain way. It continues to hold relatively well. Corrects if it has volatility. Yes, but we are not seeing the collapse that many expected. And there's a reason for that, which I think many people are not seeing. And right now we are seeing orders, huge, defending very specific areas of the price. And there are whales putting gigantic buy walls around the zone of $78,000. And if it has such an amount of liquidity, well, protected or protecting that area. Better said, the price does not drop easily. And the fact is that the moment when Bitcoin really wants to crash, it does it quickly, very quickly, vertically, violent, as if it were an elevator, without giving you time then to react. Right now we are not seeing that. And the price then is slow. It is hesitant, like being caught between two forces. On one hand, options market, it has been limiting the UPS, and the fact is that it was very clear to me that the zone of $80,000, as I mentioned today, it was going to be very complicated every time I peaked. So it was trying to break upward. There was selling pressure. It tried to overcome 80,000, got close to 82,000, and automatically 82,150. Then it was rejected, as you all know. But it's the same market that was avoiding. Bitcoin would rise too much, then it's also there, preventing it from falling too much. And it is literally, so to speak, a game of price control, a brutal battle between buyers and sellers. And that tells me that there is still then a movement left, more before the market decides a direction. Being honest with all of you, right now there are two possible scenarios, and we have to consider them. And we have the bearish scenario. The macro pressure, it continues to be too strong. Magic, then they continue. The funds still in a way need liquidity, and buoys end up seeding the area of $78,000 that I am telling you about. In that case, the zone of $70,000, even a little more below, it wouldn't seem crazy to me. It wouldn't be then the end of the world, nor much
would
less
be a correction within,
well, of an extremely complicated macro environment. After that, we would have the bullish scenario. This is a classic liquidity sweep. The strong hands, they need to shake out the weak market before moving. Price upwards is what in the method. Wake off. As you all know, I comment on it in many videos. It's called like a sprint. It seems that the market breaks. Most sell, and just after that, the price recovers and shoots up. This pattern occurs constantly, and the resistance that we are seeing in that area of $78,000 could be exactly that. The confirmation will come with the retest of that. The area I mentioned between $78,000 and $79,000, where then you have to watch the volume closely. If the price recovers that zone with ordered purchases, constant and without violent peaks, then the bullish scenario regains strength. And the next targets, then I say it would be $82,500, and then we would move to $85,000. If on the contrary, that zone becomes resistance, and the price then cannot recover it with strength, then $70,000 will become the most likely scenario. For me, the two fundamental technical references now are the average of 3 sessions and the 200-session MA on daily. As long as the price respects those areas, I don't see the point in becoming extremely bearish. But if we lose them with volume and acceleration, there it does change the movie completely. With Ethereum, I have a similar issue, and I know that many. They're going to get angry. But the chart right now does not convey strength, does not transmit leadership, and it conveys absolutely nothing like you could be observing on screen. In fact, many ARCs are doing better than Ethereum right now, and that is a pretty ugly signal for the ecosystem in general. Now, well, and this is important, the altcoin market in general is very bad. As you already know, many projects that simply then it is that they have no salvation at all. Many listed tokens have been authentic disasters, artificial rises, brutal hype, and then drops of more than 90%. And you have to understand this. Just because something has fallen a lot doesn't mean basically that it is then an opportunity. Sometimes it's just dead, and that's it. And in this cycle, we are seeing that more than ever. A lot of garbage, that it will probably never return to highs. So be careful about buying just because something has dropped a lot, because it can continue to drop a lot more. And that's it for today's video and analysis. I tell you, in markets like this, surviving is worth more than being a prediction. Right. There are people obsessed with guessing the next exact movement. I don't see it that way. You already know. For me, this is about managing the risk when it's time to win. So trying to maximize gains when it's time to lose, because there are times when it's necessary. So try to lose as little as possible. That's what marks the difference in the long run. That's why I also understand more and more the role of the system moments, like this, to have liquidity well available when the market goes into a panic. Then it can, I tell you, to give you brutal opportunities later. Because if the system finally holds, if the good stabilizes in the fear, and by disappearing, a lot of money can come in from another Bitcoin in the cryptocurrency market. And there I want to be prepared, not when everyone comes back euphoric or not. When the newspapers are in the news. Social networks like Twitter talk about historical highs. Right now, the market is not moving solely by technical analysis. You already know moves based on liquidity, for debt, leverage, and fear. And when you understand that, you start to see the chart in a completely different way. So for now, you know. Patience. It requires a lot of observation and risk management. Above all, let me know in the comments what you think about it. Do you want me to see that it still has a strong drop pending, or do you think it's preparing for another bullish leg? I tell you, I hope you're doing well. We'll see you in the next video. You already know. Cold mind.